All right, hey everyone, back here today with Matt Warder and Bret Holmes. We're going to follow up on kind of the state of acquisition in the space. It's been rough out there for a lot of you, so let's just get into it. Bret, do you want to just kind of riff on where you see things are at right now? Is it horrible,
Sure.
terrible, getting better? Is the world
I think it's getting better. I think the market's getting better. The CPLs are going down, CPs are going down a little bit. People are starting to work together a little bit more to arbitrage and make the most out of the leads. This is something that I talked about at your conference a little bit, which is working with partners to be able to offset some of your costs in order to get the leads in sort of a universal bucket here. One of the things we talked about at Agora at some of the internal meetings is the idea that we are competing all for the same leads, and we are paying 3 or 4 or 5 times over for the same leads. And this idea that, these leads are my leads and those leads are your leads, there's a finite number of leads. And if you're spending 7 figures, mid 5 or mid 6 figures, even low 6 figures, you are attracting the same leads as me. And to be able to arbitrage those things and work together is going to be advantageous going forward. It's really going to help the industry. But I am starting to see costs come down, which was the main pressure for that. And you have some fear promos out there right now that are kind of crushing it. So that's where it is for me right now. Name gen is, let me put it this way. I get excited when audience comes back, right? May not be buying right now, but audience is back. So I'm seeing response rates across some of my files of 3.3, 3.5%. And that's 20s and 15s, 20% opens, 20% click-through rates, 20%, those numbers are good. When I first got back to Agora here at Money Map Press, we were around 0.9%, 0.8% on, let's say, 2 million in mail volume a day. We're doing 3 million in mail volume a day at 3.5%. So you're getting those 150, 100,000 clicks a day. And that to me means the market is interested, but they are still kind of standing on the shore going, there's some shit out there in the ocean that I don't want to go swimming just yet, but I'm watching. And they're starting to dip toes back in a little bit more.
All right, so a couple of things here. Just for anyone who's not quite following, when you say 3.5%, can you specifically explain what you mean by that, just so everyone's clear?
3.5% is your open rate times your click-through rates, or divided, whatever it is. Right. If I get a 20% open rate and a 15% click-through rate, that's going to be 3.5%. I think, right? Is that right, Matt? It's close.
You're muted, Matt.
I think it's 3%.
Yeah, so
that's 3%. But so if I send out 1 million mails, if I'm getting 3.5%, that means I'm getting 35,000 clicks on 1 million mail. The biggest trend that I've seen right now that's effective is people segmenting their files to go out more to the people that open and click or buy more recently. Now, we've always known that, but there is a testosterone-centric part of our, which I've got a 5 million person list. I've got a 2 million person list. Well, being in the business 15 years, I can tell you that 95% of your sales and response comes from the 5% of people on those lists. So having a 2 million person list is great. Having an extremely engaged form of conversation with the people that open and click is better. And I don't think that's a mystery to anyone. That's really about execution.
Yeah.
Really about committing to 15,000 people instead of 150,000 people and saying, oh shit, that made as much money, if not more, and I'm healthier too. I'm healthier from an ESP standpoint. Send more mail.
So before you go down that road of kind of more efficient email practice, that thing you said about audience coming back, I think that was a huge one, because what seems to be like the two things that actually you started with were, costs are coming down, audience is coming back, which has been kind of the thing that's been killing everybody for the first half of this year, is that audience was frozen based on the uncertainty in the market. Costs weren't coming down on media. It kind of made everything kind of suck. So you're saying both those things seem to be coming down on your end. How much do you think costs have come down?
About 30%. And with arbitrage and working together, they can come down as much as 80%. Meaning if I'm buying a lead for $7, and right now I'm working with some partners out there that are rebuying my lead the same way other people have done. But if we're sharing that cost on that lead, they're not seeing the same responses they were, but they're paying a lot less. And they're helping offset my account, and they're getting a really good lead. So for the first time ever, what you're seeing from my end at Agora is people opening up their leads to be able to kind of sell them to the open market. And that's a decision that we had to make just based on the market environment, right? So I have to be able to say, I can't pay $10 a lead and keep them all for myself and make $2.50 in a market where they don't want to buy these. if I can sell these back out to the market for people that have competing products or different products, I'm seeing really good responses. I'm also seeing really good responses from the leads anyway.
And how's the volume look? I mean,
it's just starting right now. I'm not going to make up a number here and like say that we're doing 20,000 leads a day, but we can scale this up to 1,000 to 2,000 leads a day. Volume is there. Click rate is there. And the price again is coming down. It's not super advantageous, but it's trending down, which is good.
Yeah, that's huge. And especially with considering how things have been. So then we also wanted to follow up here with Matt and have you on here to go through, because, you know, we did this markets and media kind of conversation a couple times now, Matt. We did one on Zoom, and then you and Mark Rosano did a deep dive at the previous FMS like 2 years ago on this concept. So why don't we run through, because a lot of the things that you said on the last video, a lot of the promos that are working are kind of thematically in line with what you laid out. So let's run through that again and kind of show like how this works, and then we can run through how this plays out in the business.
Sure thing. Can I share a screen? Because that'll help take through that. But yeah, it's almost like the market follows consumer activity, John. It's pretty amazing like that. The either one of two things generally happen, right? The news will, CNBC and Bloomberg have the ability to throw headlines up, on their page, 10, 12 of them. I mean, they're basically testing email every time they put out an article, right? It's a very similar kind of model to what it is that we do. But they have the benefit of having like all these staff writers who have different levels of expertise. They can bring in outside expertise and monetize, those people, at scale. What we have to sort of do is to get smart about that, because you can't, from a media buying perspective, throw everything against the wall and expect it to work, right? So you have to be really smart about, what's coming up and then what's trending. And how we did that last time. Let me see if I can share now. Yeah, sure can. All right. And instead of doing it max screen, I'm just going to do it in the window here.
Just is like a real simple like frame for everybody. Like what we're talking about here is sometimes you get a copy promo that like the copywriter has this great idea, or the editor, you guys have this great marketing idea, and you're looking at it in a bubble, and it's like, this is just this idea that you think is amazing, but that is completely disconnected from what the hell the customer is thinking about because of the state of the market right now. And what Matt's talking about is how do you get a little bit of rigor into your thinking about how do you start to figure out what themes and the investing customer is actually thinking about right now, and what kind of evidence do we have that is actually the case, and then theming your promos based on that rather than just whatever friggin' idea somebody came up with that day that has nothing to do with where the customer actually is right now.
Right. I mean, you made that comment last time about what was the quote in Gene Schwartz's book? It was the stages of
stages of awareness.
Yeah.
It's kind of like, we're never selling, like we always wish we're selling what's going to happen next, but the reality is we're selling what just happened to a certain extent, because that's what people are paying attention to, and we arbitrage attention. So you got to talk to what they're paying attention to.
Right. Well, yeah, like Brett was saying earlier, basically you have to be able to monetize if you have the toolbox to do it on what people are looking at right now, because those are the easiest, most lowest hanging fruit of conversions, right? So if people are out there searching for crypto, they kind of know what product they want. They know that they want it. They're just looking for the guy to basically deliver it to them. And it helps, I think, from our perspective, from like a business planning perspective, to understand how those things generally will pop up. And that's kind of what I was talking about last time. A quick review of the approach. The things that make market move are consumer spending and price activity. And that's really it, right? Whether it's the consumer, whether it's the government spending, we had the big stimulus that worked its way out to the consumer, which worked its way into the market. Investment activity, imports and exports, all those things comprise GDP. So if you track GDP and GDP's components, you'll have a good sense for whether the economy is rising or the economy is falling, right? And the same thing goes with prices. The more money that's in the system, the more it's going to go toward, food, housing, transport, clothing, commodities, etc. And it just so happens that all of these spending components make up CPI, what we think of as inflation. And inflation just doesn't go up, or it doesn't stay at 2%, or it doesn't go down all the time. It's a cycle. It moves up, it moves down. It ebbs and flows. We've had from 2000, just after the global financial crisis until COVID, we had this great sort of like period where interest rates are really low. inflation is comparatively low and the economy is growing. And that's, well, it's easy to be a stock picker or an options guy in those environments because volatility just goes to zero, basically. So when things change, when there's a shift in the market, like there has been since COVID, especially with supply chains, geopolitical unrest, the decoupling of the rest of the world, the game gets a lot harder, right? So GDP and inflation, that gives us a two-factor model, right? So either one can go up and down. That gives us four quadrants of a graph to sort of work through. When both are going up at the same time, that's really when inflation kicks in. When both are going down at the same time, that's deflation. This is when the market shits the bed, right? It just absolutely tanks. And then we have these periods in the middle where we have mixed modes, where we're growing, the economy is growing, but inflation is falling down. There's a chance next year we can get to this. This is actually really a great time to do growth promos and next big things. You got to have it in your toolbox. You got to have it ready. But
yes,
this is a possibility mid next year. Stagflation, is not so great. It's very hard to sell in here because this usually represents like a market turn from positive to negative, and conversions. A lot of times these economic conditions will happen in the summer, and with people away plus economic changes. It's a lot of the reason for I think why we have kind of lulls in the summer in general. But like for every one of those sectors, for every one of those zones, there are different financial assets that do better. But in general, what I like to think of is when the economy is growing, that's when we get high beta, small cap, momentum, tech and discretionary work really well because there's more money in the economy. Consumers can spend more. Counter to that, when the economy falls, when GDP falls, when consumer spending falls, that's where the market needs to get defensive. That's where we need utilities and staples and real estate and gold, fixed income, low beta, dividend, income, like those types of ideas are going to work better when people are fearful, right? So GDP rising is all greed all the time, 100%. GDP falling, you have to at least be able to have a theme that kind of works with that. There were some, I think it was like the Nomi Prinz promotion that came out earlier in the year, talked about like strange activity, right? Mm-hmm. She was just talking about the gold standard, but if people are getting worried, talking about something unusual versus something genuinely fearful can sort of work. And obviously, for promotions, 5G works when the economy's growing, right? And trading systems and penny stocks, and then when the economy stinks, that's when you have to sell crash and gold and inflation and protection and all that sort of stuff. I mean, we're not telling anybody something they don't know. So you just have to be able to know what's coming up.
But so this is really valuable. Like, so as a marketer, sorry, go, John.
No, you go ahead because I wanted to stay.
No, you can leave that up, Matt. As a marketer, a couple things happen here. One, what you're seeing right now is people continue to try to sell the same services over and over again and beating their head against the wall, saying, "Why doesn't it work? Why doesn't it work?" Look at Matt's chart. Look at where you are right.
Back up, Matt.
Yep, I got it. Hang on.
Like, look exactly where you are, and he is not wrong. So a few things have happened. One, everybody, well, a lot of people did really well during COVID. Really well. Companies got huge, especially, corporate level companies put on mass amounts of human capital, resources, et cetera. And then the bottom falls out of that market and you move into this sort of inflation, deflation, the bottom half. And now you're trying to sell the same products with the same overhead as you were before, and it's not working. And that's not what we're in. That's not what we're in. However, me personally, I've been doing this too long to chase something that isn't good. And that's something that I don't like that I'm seeing right now is people trying to capitalize on this market by promising something that isn't real. And that's a lot of time you get that with fear, but when it comes to trading, right? So trading systems, option strategies, even penny stocks, commodity resources, even though these are in the top half, the vehicles to take an opportunity on those, whether it be trading, day trading, investing, et cetera. And the storylines there, like you can find option strategies that talk about negative. You can find stock strategies that talk about fear, that talk about the current economy. Yep. You have to pivot your product in that messaging to talk about the vehicle that you use in order to take advantage of what's actually what people are doing. So you talk about large caps, you talk about value, but you can also put some greed on top of it. But the base has to be the concern that they have. And committing to this is one of the things that people really don't like to do. They like to say, well, I'm going to continue to sell Forex, or I'm going to continue to sell futures, or I'm going to continue to find, 200% options gains. That's great. But if I'm standing out here going, every consumer going right now, very few of them have faith in where the market is or where it's going. That's just a fact, right? They're just, they don't 200% gains. But given the audience that I talked about earlier, they do want to hear you talk about large cap stocks, getting the buyback in, talk about value, and then you can sell them on the plan. Listen, if you're going to buy them, you might as well trade them. If you're going to trade them, here's how you trade them. And that's the line you got to take right now for me.
Yeah, no, for sure. As my Twitter friend Raising the Bar often says, we're in a bear market, but guess what? Bear markets bounce hard. So
Correct.
we have this period where, go ahead, sorry.
No, go ahead. I just call.
Yeah, no, we have this period where, everything in developed markets is going to go on, and I'll get into this here in a second, like this 2 or 3 quarter, period of just, kind of misery where this happens, where you have just day after day of 1.5% down, 1% down, 0.5% down. And then you get a little closer to options expiry. And because the world hasn't ended, you get this nasty rally into OPEX. And that will just rip your face off if you're short. So you can't be perma short. You can't be perma bear. Can't be perma anything. That goes to investors as well as marketers too. Like we can't, this is not an environment to be, complacent with what's going on. Things are going to change weekly, and you have to be able to kind of pivot. Even better if you can position your readership, or at least let them know, like, hey, we're going to have a rough 3 months. We're going to be all over the place. If they know that that's coming, and that you have a handle on it, like all of a sudden you've saved a big part of your subscriptions that you could, if you make a mistake, could otherwise be burned. That way you could be transparent and accountable. Shit, I got this wrong. Not a big deal. Here's how we're going to get the next one. It's a great opportunity to develop relationship with your readers.
Yes.
And that's the thing that I really want to hammer home over the longer term.
Another thing here that I'd like to interject too is that one of the things that I think people, we have all these rules of thumb that everybody in the marketing space here kind of sticks with. And you remember back when you couldn't sell an options promo as an options product because nobody wanted to trade options. So there's all these really shitty ideas of turn the stock market into an ATM with this 4-digit code, and people would refund it 80% because you were like, holy crap, I don't want to trade options because you didn't tell me it was options. But you couldn't sell that at that time, right? So you had to do these crazy things, or people thought they had to do these crazy things, and now you can. The actual customer, just like everything else, every one of us in every area of our interest, we've got to increase sophistication. Now I'm not saying that your average customer is a hedge fund level professional investor by any means, but there's a much more sophisticated understanding of financial markets and trading and everything else than there was 10 years ago.
Sure. And take fitness, for example. Perfect, right? 20 years ago, you bought an ab roller, you bought a shake weight, because that was going to cure your fitness ailment, right? Really quick hit stuff. And then people started to now people get trainers, CrossFit, they read books. The education level of investors and traders have gone up. So to treat them like they're still 7 years old, and that you have a magic wand that's going to fart out a 4-digit code that's going to make them $1 million. Not only are you probably acquiring a borderline, I don't want to say liable, but a dangerous level of customer, but you're alienating customers who are I get it. I just want you to tell me that you're better at this than I am, which is kind of the line that I'm taking on my marketing. It's the same thing with sports gambling. I may have an understanding of, the Falcons New Orleans game yesterday, but I don't know the name of every offensive lineman. I don't know their ailments. I don't know the backups. I don't know anything. I have a sort of a understanding of the Falcons. Okay. But if somebody comes to me and says, I know every single player, I know they're all, he knows way more than me, I'm willing to pay for that level of information. It's similar to this. I'm not 7 years old anymore. You don't have to talk to me about options like they don't exist. They do. And you know what? At the end of the day, that may mean we don't have $300 or $400 million businesses floating around, but you can have a very good $30 to $50 million business right now, $100 million business that takes advantage of the fact that people understand the markets, they understand they want to trade, they understand they want to make money, and they also know that you know more than they do, right? You don't have to treat them like kids. So you're not attracting that extra $200 million of clientele where it's like, there's a magic code. It's not a magic like it doesn't
Right.
work. So
Right. And that's where, like, I think that depending on which size business you are and if you're a small trading company versus somebody who's talking to more investors, like, you're going to take a different spin on this chart and these different themes.
Sure.
But like, if you're a small trading company who's really sophisticated in terms of your trading, then you wouldn't be talking to that customer. And there's a lot more of them, which is like, I think that right now there's more opportunity in the smaller side of the business than there is at scale, like you said. Like, I mean, I think you nailed it perfectly. There's a basic principle that as you scale, right, you invest in, like you said, resources, infrastructure, and during a boom, you can cash in on profits at a level that somebody smaller couldn't, because you have this infrastructure in place. And then when things kind of retract, you have all this spend, you have all this burn rate, you can't pull it in. It doesn't give you multiples the way it does in a boom. And so the bigger side of the scaled businesses are hurt more. And then I think parallel to that right now, things that have happened with like the FTC, things that have happened with like the display networks and some of the issues on pricing, like, that's going to hurt you at scale more than it is sub 50 million, right? Like,
yes.
And so the opportunities right now, there's opportunities all over the place for people on the smaller side of the business to make a lot of money relative to where they're at.
And the small businesses that I'm seeing that are succeeding are the ones that are filling the market share that the older businesses have not pivoted off of. You know, they are literally talking about apps. They're talking about pairing with platforms. They are talking about making trading easy. You know, pushing a single button, having instead of sending emails to somebody with a trade pick, man, that's 10 years ago. And every 10 years we go through, it shouldn't be that long, 5 years.
Yeah.
Like, larger guys have not recreated the medium. They're still trying to write packages. They're still trying to write VSLs. You know, 2 years ago, I was like, guys, the product has got to be the promo at some point. Because you've already acquired that level of customer. You're not going to reacquire them. And our competition is getting smaller, leaner, and smarter. And they're making it easier for people to be able to execute. The financial markets aren't going anywhere. Sports isn't going anywhere. You could set your watch. People are going to always be interested in the stock market. They're always going to be interested in sports. They're always going to be interested in the weather. But the medium in which you deliver it has got to change.
Agreed. I think that's it. Your whole idea, you've been on this for a couple of years now, is product as promo, is a huge one. And I think that you talked about this, was it last year or the year before at FMS, about, you get guys going live on YouTube with 50,000 people live on there. Like, imagine, and they don't have a publishing business behind them. But if you could pull that off, and that speaks to, I think, another big trend that is not being looked at, in that if you look at like Agora as a company, it has what's called an ecosystem model, right? Like, it enabled an ecosystem by creating a centralized platform that would then allow business units, like fuel business units with capital and services. And then market-wise, basically, when Porter rolled out, he basically did the same thing, but took out that profit model of central services. And so that you had basically an ecosystem model that did the same thing, but you didn't take the money out of the business unit so that it could scale faster, because you could spend more money on acquisition. But just to continue my point, what we haven't seen is anybody who's starting to use some of the social channels effectively. And there are plenty of trading groups now that are making good business unit revenue on a social level. Nobody there has taken an ecosystem approach to go out and build out multiple. And I think that is a whole area, an avenue of massive opportunity that is completely unexploited right now. And we're going to see that. Just like I think that the trading tools side is, there's no market leader on the signals and trading tools side right now. And so there's a lot of opportunity.
And you're seeing them thrive because they're actual traders. They're actual investors. They're not celebrity level gurus. You don't have access to. They're not going to put in like the work, or they're not really going to do social. They don't have time for it. Okay, I get it. But back to the Agora point, it's not that Agora invested in business, like they invested in an idea, right? So each business had its own idea. And the reason that Agora right now is starting to bounce back is because you had Jim Rickards kind of sit on the sideline for a few years, and now it's his time to shine. Because Agora can invest in the myriad of ideas that are across the board, right? They can keep Jim over here doing his thing for a long time. And when the market actually does align with his point of view, he can capitalize very quickly. So if you're a larger business and you only have 4 or 5 verticals around one train of thought, if it's just like trading options and we're in a bull market, you're going to get smoked. You know, if you are a business right now that thrives on momentum and the market going up which was great for 10 years, you're going to find it really difficult. One of the reasons that larger businesses thrive is you have to cultivate ideas that deal with the underbelly of what could happen if that goes away. Contrarian points of view, which is that's what the core of this business has been forever, is a contrarian point of view.
I think that's where, like, I think there's a huge parallel between actual, like, financial services businesses and publishing businesses in that sense. Like, it's basically a large company has a portfolio approach to their editors and their ideas.
Yes.
And then small companies usually can't. It's like a small hedge fund. He's not going to have a huge portfolio approach because he can't yet. So he has to be much more dynamic in his ability to change with the market. And if you can't change with the market, you're kind of screwed. But you want to, as you grow, you need to be building out that kind of portfolio approach. You need to kind of have a hedged product. Like, you can't not.
Yeah, you have to be able to hedge across I mean, you know, most Agora companies thrive to get everything from gold to options, everything from fear to greed, the whole way through. And there's a high tide for this side, and there's going to be a high tide for this, and the market's going to matter there.
And I think that's why with coming back to your work, Matt, like, I think that business planning side of that and promo planning side of that, like, that is, like, I mean, you have the framework and the kind of mental structure for how to think about this, and then you can go out and look into the market where things are, and kind of start to think about, like, hey, like, we know certain sectors are coming back large, like resources. And you have nothing whatsoever in the resource sector, and you have no plans to do anything in the resource sector, you're not going to be able to capitalize on the growth of that side of the market that is very obviously coming because of, look at all this data and look at all these reasons. And the same with, like, you know, Bitcoin. If you never got into crypto when all the crypto stuff was going, you didn't benefit from one of those massive changes in the market. And so taking that portfolio approach and then using your work, like, as kind of like the backbone of how to start to think about that, I think is pretty useful.
Also, on that note, like, realize that, so one of the things that happens with smaller companies is, or one of the things that I hear from owners of companies is like, well, why don't we just pivot into what Jim Rickers is doing? Why don't we pivot into gold? Your people aren't stupid. Like, putting on Wheel of Fortune, and then you just put them on Jeopardy, they're going to go like, he's not Jeopardy. Like, they're not gonna buy into that vibe, like, right away. That's not gonna happen. You can't pivot like that. So if you're sitting around chasing a backstory here that is around gold, or, you know, the downturn of the market, and if you don't have the chops to be able to do that, you're gonna lose audience on both ends. You're gonna cannibalize yourself.
Right.
Don't do that. Like, the key is, you have to realize we work in a best-selling business. And it's painful because some of us have gotten big to the point where we brought on infrastructure, and we sit around and, you know, we went through a layoff here, and people are texting me like, oh, how are things going? I'm like, this is part of the business. Like, you get big, you lose market share, you go back, you wait for it to come back, or you develop something new that capitalizes on market share. But what you don't do is you continue to try, like, pivot with the same message into something that you don't know and expect that to be good for your business. Like, I'm selling orange juice, and orange juice, all of a sudden the FDA comes out, orange juice is really bad for you, it causes cancer. And then I immediately go from making orange juice to making apple juice. And that brain ain't gonna fly. Like, it's not gonna work. You got to reposition yourself a little bit differently. I think about it differently.
Yeah, I mean, it can work, you know. It just depends on a number of factors. Like, you know, for instance, you know, there are a whole bunch of services that deal with unusual options activity, right? And, you know, most of the guys that I've met, who worked in that, you know, Lance Ippolito or Andrew Keene or some of those guys, they're agnostic to what's coming through the tape, right? They don't care. I mean, it's which, you know, from an editorial standpoint, is very hard to write about, you know, a nihilistic market view, like nothing matters. But, you know, from their perspective, order flow is key, right? Because they're playing, you know, basically gamma adjustments that market makers have to make as you head into either weekly or monthly options expiring. Did I freeze?
You're fine now. You did.
Yeah, okay, fair enough. I have a file that's loading that I wanted to show a correlation chart to, and it takes up a lot of resources. But if we go through a period where gold is beginning to trend and we're beginning to see some either protection flow through in the unusual options market, like all you have to do if you have one of those guys is make sure that they know somebody they can talk to. Bring in a heavy. If you don't have Jim Rickards, don't sell a gold service. That's not a big deal. But like you could sell, a small cap service if you brought in Rick Rule for an interview. Like you don't need the person to run the whole thing. You just need the idea and a clear plan of execution.
Yes.
And then you're okay. Like if you have an unusual options guy, run a promo about an idea, but he's still doing unusual options. Don't deviate from the plan. If gold goes away, well, we're still the plan's in place. We're going to follow these things.
And also don't expect to sell as much. Like don't piss you off. Like you sell some, but you have to remember what you launched on, and it was probably greed, and it was probably a market that was going up. That's where your audience came from. Matt is absolutely right. Like when I say you don't want to pivot you have to tell the story, but you also commit to what your core principles are around how to make money. And if people aren't buying, I'll tell you right now, my traders right now, they aren't selling nearly as much as they did 3 years ago. Nobody is. However, their gains are great. Their track records are good. And you keep stacking track records and gains. When you come out the other side, you're going to be positioned really well from a promo point to capitalize. And you're also customers that are sticking with you happy. Like they're happy. The worst thing you can do is disappear, is be like, oh, this isn't my kind of market. I'm going, what? Can't do that.
Yeah. Well, that's
the story.
You go back to 08 and after the crash of 08, like all the really good traders that I know had some of their best years ever, right, in that volatility because it was so crazy. But again, it was still hard selling. And then you come out of that and it's like, look, now all of a sudden it was like, because that fear in the market after a bad event stays longer. And now the fact that you navigated that so effectively, like that as a proof piece and a credibility piece, just is so strong for a couple of years, because everyone is like, well, what if it happens again?
Well, that brings me full circle back to where we started, right? My audience is still here. I'm getting better clicks and readability now than I did before. They're just not opening their wallet. And you are not going to you will break it down a little bit, but in a non-greed market, as a trader or as a great investor, you're not going to get them. They will watch you. They will listen to you. They are waiting for it to turn just like anybody else is. And they're waiting for opportunity.
Yeah, it's if you're pivoting to something like this, it's like you got to do front end at best to your first go round and find the people who are really convert at least a low rate, who are interested enough to pick up what you're putting down, right?
Yes.
It's you can't go straight. I mean, we made that mistake in 2019 with Mark, right? Going straight to back end on a complicated product in a market where everything was going up and people didn't really care about resources and all that stuff. Like, it was just, let experience tell us, what's right and what's wrong. Yeah.
Price points should come down now. If you guys are wondering about price points, shorter terms, lower price points, you may say to yourself, well, we're going to go the other way, and go the other way.
Better be awesome. Yeah.
You better be awesome, and you better have already told this story for a long time. But I'm giving really good money back guarantees. I want proof in the pudding. I want paper trade. Get in there, tell the story. People are still paying attention. They're just willing to part with $2,000. I mean, you have to understand your customer's mentality. They give you $2,000. They're expecting to make 20. They're expecting a 10-to-1 return on their money. They're expecting to have some fun. They're expecting to learn. They're expecting to be engaged. They're expecting the product to be easy. If you're giving them $300 or $200 for a month or a quarter, they're still expecting the same thing, but that level of entry is less. And just make sure the product is good. Doesn't have to be right. Right is not good to me. Good is I'm checking in with you every day and you are telling me what's going on in the market more so than I understand. And that's, like right now I'm getting 12% refund rates on trading services. Are they as advantageous as they were a year ago? No. Are they beating the S&P? Yes. Am I happy with my traders? Yes. Are my people happy? Yeah. Like they're happier. So.
Yeah. Okay. Yeah, no. And then, I guess sort of one of the last things I'd probably say was just like, you can, to track what's converting doesn't really take that much work, right? We do that in editorial, every day you should be having a meeting in editorial, like what's trending on Bloomberg, what's trending on CNBC, what's trending on Twitter, what kind of search things are trending. And if you follow that and you understand the cycle, you can position yourself ahead of things, both from an editorial perspective and from a business planning perspective. Because like, whether we like it or not, we exist in the entire business cycle. And the entire business cycle doesn't just go up and it doesn't just go down. It fluctuates from week to week, from month to month. When government comes in and changes policy, well, guess what? That's a big change of money in one direction or another. And you have to at least understand how to process it. But like, for us, like, what I do, it's pretty straightforward, right? What we called for last time was pretty easy. I just said, dollar down, tech stocks up. And here's a tweet from July 18th, right before we recorded. And like, here's call option that's popping up. Cryptocurrencies popping up. I look at a Z-score basis. So 30-day rolling, how many standard deviations is it away from the middle? Was it way down and it's coming back up and beginning to trend positively? Was it way up and it's starting to roll over? Those are the kinds of things I sort of look for. Last time was pretty easy. Like the message was, recession's canceled, nobody cares anymore, and everybody's going to YOLO Ponzi tech calls. And that's what they did. And sure enough, so just green is positive, red's negative. Like all of these things, swing trading, day trading, call option, small caps, tech stocks flipped from negative, okay, the red, to positive. Here's the date range. There's my tweet. Here's where we recorded. And all this period in August just absolutely slapped for trying to convert on promos. Even old crypto got into the act. Like crypto actually did pretty well for a period of time. And then Michael McDougall on LinkedIn put out a great video that basically clarified that, right? So you can run all those promotions, and at least in his network, he was reporting that 85% hitting their success metrics, on these themes. But look at this, like 25% crypto, 17% options, finding the stocks, 10% tech stocks. This is like, and here's the one that I keep banging on, right? Energy. Absolutely nobody's done a damn energy promo. We're about to go into the what could potentially be the one of the worst winners in history. Also might be a nothing burger, but it doesn't change that we're going to go through this problem every winter for the next like 2-3 years until Europe gets their shit together. So like if you haven't figured out how to market to that, it's worth checking out. But like, these things, crypto, options, tech stocks, penny stocks, those are all business cycle relevant, right? I really think energy is going to outperform over the longer term. This was back in August, and now we're going through the other part of the cycle where energy crisis trends up, and then small cap stocks, tech stocks trend lower.
So Matt, can I ask you a question?
Yeah.
So as a marketer, the reason that I love talking to you is because over the last 5 years, I didn't mean to interrupt, but I if I'm a marketer watching this, I'm like, okay, because 5G, crypto, SPACs, marijuana, direct investment, whether it be the Jobs Act, et cetera. These are the 5 options trading, a little bit before that. But those are probably the 6 major themes that have bolstered this industry over the past 15 years. And I think one of the things that I get jealous of with my competition is their investment in going to, I'd say, non-financial publishing conferences like the tech consumer conference, like to see what's coming next and investing. And because if you're right, so let's put the 5G promo from like 2 years ago. They were writing that now to launch in April. They were ahead of it now. Like I'm sitting next to Jed Caney, like everything he's ever worked on was probably 3 or 4 years in front of where it went. Sometimes too far in front. Like our crypto promo in 2012 or 13 was, it was like 3 years too early though. But so if I'm a marketer, Matt, how do I find out what's coming next? And you got any insight there? I mean, aside from energy's good, but energy's a little big, a little beefy.
It is. There's some really good stories in it. Bonner and Sugar are hitting on, but like, pretty much as soon as I put that tweet out, well, look what happened here. Commodity outperforms, energy outperforms. We know when this is going to happen. I look for search interest to tell me when, but the fundamentals tell me that it's coming. And then during that time, since we filmed that promo, the XLE is up 10% versus the SPY at 3 versus the Qs at 1.3 and Bitcoin, which is down -7%. So if you converted people on Bitcoin here, they're probably not happy with you. They might get a little happier here over the next week, but like, it's just pretty gross out there. So like Bonner and Sugarroot are converting on that theme. And really, it's about the only one that I've seen that's tried to do it here. From my perspective, this is going to work across all resources for about 5 to 10 years, depending, just because the lack of expertise at the governmental level that's fueling, the broader transition away from, carbon and fossil fuels to, to metals-based energy doesn't understand the resource sector at all. So
Sure.
there's going to be a lot of opportunity. You don't have to develop a resource product today or tomorrow, but you should think about it over the next little bit.
Most of our customers, most of the people that watch and read our stuff, most of their interpretation of the resource sector is the price of gas, right? Like it or not, they equate the price of gas to energy. What they did a good job with in the Sugar and Bonner promo is creating this environment where, let me explain what energy really is. Let me explain what, like land. They're not making any more of it. Like there's more on the ground, but everything's getting boiled up. Energy's going to continue. They created that storyline so that I bought into it. So, if I'm looking at trading people right now, I have to be able to not only capitalize on that storyline and explain it to people so they buy into the philosophy. It's like getting buying the philosophy of CrossFit or diet. Like when like in the 80s, it was like 0 fat. And then people realized that, well, fat didn't make you fat. And then it became carbohydrates, but I had to buy into that philosophy in order to really change the way that I ate or what I bought. Same thing with like energy. And I got to buy into that. Which is interesting.
But to your point, Brett, one of the projects Matt and I are working on actually outside of this, and this is kind of speaks directly to this issue of like, well, how do you start to think about what's coming ahead of time? Like we're going to start doing these kind of interview series, not like macro series, where we're going to take a sector, like we're starting with basically the rise of the commodity super cycle that's coming, and we're going to get some real macro analysts like Matt, and some other guys do a macro overview of the sectors and then deep dive with some of the best guys in the sector, like from the industry. So like, when we talk to gold, I want to go, we may be getting like the head of the Gold Council and the chairman of one of the largest miners out there and a bunch of other guys like that, and deep dive on a sector and start to have this by sector from consumer goods and start to bring this macro conversation in. Not just for publishing, we want to do it for a bunch of other things too, but it's going to be available where like you can start to get like these views, because our thought is the macro analysis plus like the inside industry view stuff. And this is going to be too deep for like retail, I think. But like for anyone who's really serious about this stuff, like we want to bring like that level of analysis by sector and do 6 to 8 of those a year, because there's a lot of big things coming.
It doesn't have to be too deep for retail if you do the one thing that retail looks for.
Well, I'm not trying to do a subscription business. That's my point.
No, I know, but I am. So
right. And that's
like
what
I want is somebody to tell me $150 oil. I want somebody to tell me $2,500 gold. Like at date. Like that's, and if you're looking to do the commodities super cycle, for me to be able to sell it, or anybody in our industry to be able to sell it, get me to buy in. Like you can give me all the proof you want, give me all, but at the end of the day, you have got to put your hand up and go, listen, by August 2022, gold's going to be at $2,500 an ounce. Here's how you prepare yourself. Right. Think back to Y2K, right? The reason that Y2K was so, I mean, I won't say successful or whatever, but the reason that it was such a major story is because it had
a date. Yeah.
Awesome. Not only was it was a major definitive date.
I still have all those dialogues like Amazon.bomb and like, it's like all this stuff from Y2K.
But everything that I've ever sold in energy and commodities has been successful, has had that $150 oil a barrel, $2,000 ounce for gold. Even if it's something like uranium, I don't know what uranium is, but if you have a theory, if you're looking to capitalize, you've got it. In our industry, this is what we do. You've got to be able to stand and say, it's this price at this date. This is what you do to prepare for it.
And to be fair, absolutely. Like we're at the stage in the market where, we haven't explored for oil and gas, we haven't explored for copper, we haven't explored for battery metals, and we have this huge transition coming up. And we're going to be in these, miserable, like marginal ton economics. I mean, coal has outperformed Bitcoin 2 to 1 at its peak over the past 2 years. Like that's crazy. But there's not enough to supply demand, especially if Russian natural gas is going to be out of the market. So when when you're Europe and you need a ton of coal in order to generate power, what are you going to pay for it? $700, $800, $900? I mean, like these are excuses where you can actually go and make, some ridiculous claim. I mean, there are legit analysts on Twitter calling for $200 oil. I'm not in that boat. I don't think we get that high. I think policy is going to keep it down. But it's not. This is the one time, okay, since I've been an analyst that I could watch a promo and somebody says $200 oil, and I go, I don't know, maybe. Kid you not, like you know how anti that I am, but we're there. Like we are literally there. So like you were asking about short term. Here's what's happening.
I'm always looking 3 to 6 months. I'm always looking for 3 to 6 months. Like whatever 3 to 6 months out, I got to get somebody on the project now to talk to somebody like you to make the case.
But wait, with that 3 to 6 month thing though, isn't like I remember this was I think Brian Hunt and Mike Palmer both said this in different ways, where like from a front end theme standpoint, you're looking for those longer term themes that are going to be like 3 to 5 years at least, and then you can have multiple promos inside that theme because you're trying to build that audience. Right. And so you're looking at promos that are 3 to 6 months out based on a longer term theme. I mean, do you guys think that way too, or no?
I mean, I'm always trying to I have to figure out this week, because that's what I have to do with, with my money. And I have to figure out what the plan is for like the next like month or so and what I kind of expect to happen. But most of the rest of the work I do is looking out between 3 to 12 months. I never go longer than a year because that's just irrelevant from a short-term positioning perspective. I'll hear 2 and 3 year ideas, but I don't.
If you're building a franchise, if you're building out a your editorial team, and like you're looking at like, I want to get multiple promos, and it might take 3 to 4 months to get, sometimes 6 months to get a great promo out. And so if your idea is only 6 months out, now that's a different issue. But like, so having an idea within like a broader theme, like if you say like, and just using this as an example, like there's a commodity super cycle coming. Okay, that's going to be thematically, there's going to be a lot of sub stories inside that story over the next several years.
Yes.
And that's what I mean is, so like you do not need to have a longer view on some of this stuff, unless you're short-term trading and you're saying like, I'm agnostic and I'm going to prove that I'm agnostic and I'm going to trade whatever's hot and yada, yada, yada. But like, that's a different kind of customer.
Yeah, I mean, well, media buying, like determining when to ramp up spending or ramp down spending on certain long tail keywords or whatever, that's kind of like day trading, right? I mean, how you choose to allocate capital to your list is not terribly dissimilar. I mean, to that end, I'll give you a 2-week view basically, and then we'll do like 3 to 9 months. So like the 2-week view, I was talking about options expiry here this Friday. It's quarterly, it's quad witching. So we can see some wild stuff, right? Crypto, tech, small caps, and even like short squeeze. Let me find short squeeze here. I think it's on the next page. But like, here's small caps bouncing up. Here's swing trading bouncing up. Here's crypto. My God, bouncing up. Compare that to day trading. Like this is more like a longer term thing. Tech stocks have already bounced and are falling down. I think that's crypto's future. But like commodities are starting to trend down. It's the opposite of what we saw like a month ago. And then if we flip over to, like gold looked like it was going to pop like just a week ago, and both gold and silver have failed to trend. Nobody's searching for recession. Recession's canceled. Sure. Short squeeze searches down. But like, look here, energy crisis still huge. Dividends still on the rise. Inflation might actually be turning here. We'll see how that works out. Emerging markets, it's hard for trading services to do a lot with this, but this is just the inverse of the dollar. So if the dollar sort of rolls over here, the market's going to go up, and that's when emerging markets are going to do well. I think that's kind of what it is. But this is like 2 weeks, like up through Friday, and then the resolution of market maker positioning on the Monday, Tuesday, Wednesday following. And that's where this is headed. Longer term,
this is gold.
Longer term, I don't look at any of that stuff. I just really look at, if you go back to the GDP relationship, it's all consumer, right? And investment. And the number one like factor in anybody's model is going to be personal consumption expenditure. And so, we had COVID in April of 2020. When you do those year-on-year comparisons, if you have the worst quarter ever, well, then guess what? The next year, you're going to have the best quarter ever. Duh. because math. So from here, like the comps get increasingly harder. And look what's happened. It's gone from green all the way down to red. And then here in July, we got a little bit of a reacceleration. Like I said, I think we'll get one in August, maybe even a flattening out in September. But all of the stimulus for this is done, right? Like everything's done. If we look at labor, total employees, again, here's a great comparison. And now we're down to like flat, right? We're not improving total employees. We're not improving total hours worked, total labor. If you don't work enough, you don't get money. And if you don't get money, you can't spend it, which is what that metric is. That drives a whole damn market. Industrial production went from green down to flat. It's declined steadily over this whole period. If we're not producing stuff, there's nothing to sell. So there's nothing for people to buy. So there's, I mean, you see where I'm headed here. And then rail traffic. Rail traffic this is how we get product to market. Well, we have these huge inventories, and look at rail traffic. It's just steadily declined to the point where it's negative. Got a little bit of a reacceleration as we head into Christmas, which is seasonal. But if I were to remove seasonal effects of this, it just goes down, down, and down. And then money supply. Well, the more money that's out there floating around in the market, the more money can be dedicated to pushing up prices. And the Fed is in quantitative tightening mode. So money supply was green, and it's going red, and it's going to get worse. The Fed is going to continue to follow through on hiking interest rates and pulling back spending, pulling back the balance sheet until something breaks. Basically, they've said it as much in their minutes. So expect it. So when I pull that forward and look at the longer term, like here's where we came from. So we came from this like stagflationary kind of crappy environment in Q2 and Q1. Where like large caps barely worked at all. I mean, the market was down. What worked was energy, which was in a supply shortage, and not much else. Long energy, short tech was this trade. Now we're coming in here. So this is deflation. This is the shit hitting the fan. This is bad. And although GDP isn't declining fast, it's pretty close to the origin here. Like inflation is coming down. If inflation comes down and it's grinding lower, it's not like really falling over. It's not going to do that until the middle of next year. It's not helping anybody. So if GDP is declining, consumer spending less, and inflation is barely declining, you've got problems. And I don't think we see any of them resolving until at least Q2 of next year. So like from the promo perspective, just forget this stuff. When we have these short periods of time where search is trending, and you have things on the table, you can push media, but you can't push media constantly, 24/7, all these next 9 months. Can't do it. You have to pick your spots, pick your targets, and when the market is favorable, gun it. In the meantime, like I think we're going to have to find ways into promos from these more defensive positions. And to be fair, like I think that's doable. There's no reason why we can't talk about fear in the market if there's fear in the market. Lean into it. Don't be afraid of it. Like that's how you generate trust with people. If you say, look, hey, I know what's going on, and here's how we're going to deal with it. Like you're going to build trust amongst your subscribers, and you're going to get more of them. And to the extent that you can add any kind of expertise, whether it be internal or external or whatever, that lends you credibility. And the more credibility you get, the better ideas you have about how to execute from both an editorial perspective and a copy perspective. Even though the market's going to suck, I think for 3 quarters, you can still build a profitable business.
I don't normally take notes. I'm already racking my brain. Like, who do I have? What do I have? Who do I need to get to tell these stories? You're not wrong.
Yeah, and that's the thing is these are all just stories, right? That's how Bloomberg positions them. It's how CNBC positions them. You just have to find how to tell them with the toolbox that you have. Those are your gurus, those are your editors. And I think we're moving into this period. John and I talked about this where, I think copy may have to kind of like maybe at least hat tip to the copy of old, right? Like the Rick Rule promo that Jed wrote was basically a treasure hunt. That's romantic. That's interesting. Like you can get some people interested in ideas like that. I mean, it doesn't have to be specifically a treasure hunt.
Don't tease me sitting next to me.
Yeah, right. But like those kinds of ideas, like where there's a, you know, a glimmer of greed in a sea of fear, and let me be your guide. Like I was talking to somebody the other day. I was like, you don't even have to know that. If you're interested in learning about it and you can go find the expertise, like people will go on that journey with you. I love those things. Like where people, you know, walk into something completely, just unprepared and don't know what they're looking for, and then they find out over time. I mean, I'm attracted to those stories, even in this industry. So, like, you know, that it resonates with more people than anything.
I agree.
Mr. John, yeah, any thoughts on all that?
Agree? No. No, I mean, I think that we're basically going back to that idea of like whether it's a throwback to old promos or not. I mean, it's definitely a throwback to like, well, it's not even a throwback. It's when the water goes out, you can see who's swimming naked, and all the kind of copywriters who didn't do anything other than, and publishers who do nothing other than promising like 10,000% returns with no other story or anything like that. It's harder for them to survive.
Yes.
And I think, you know, just like the customers getting sophisticated, the business is getting sophisticated. You have to be a better operator today than you had to be 7-8 years ago. And if you're not a better operator on every level, from editorial to copy to marketing and media, then it's gonna get harder and harder. And that's the thing that, like, I mean, I hate to say it to people, but like if you've been in business since like 2009 and you haven't had your best years ever, like amazing growth during the longest bull market in history, like things are going to get way harder for you. Like, you know what I mean? Like, and so like copywriters who were like, hadn't figured out how to write copy over the last 7-8 years to get any real big winners, like you're not going to get any real big winners now, I don't think, because like we had the easiest copy environment in the history of the industry, I feel like, in the last.
Well, it's not just this industry. I mean, literally all of managed money had the easiest time from 2008 until you know, COVID really hit, and then we had another year and a half where it was still easy. So like all these you know, pod boys that you know, that grew up in this environment thinks it's easy to go make alpha, and that's just dead wrong. So the game is getting harder. You know,
the competition is getting more sophisticated because, you know, when you go through some of those ideas that you were just showing, like my immediate thought too was like, well, I know guys whose business is YouTube and article production. And you're saying basically like you're able to start to predict out even a few weeks ahead of time what content I should be producing for what people are going to be searching for, and start to be able to time the search better. Like that's a really valuable thing to anybody who's trying to work the system in terms of organic, right? Like that is very, very powerful. And if people systematize that into a business, then it squeezes out all the people who were kind of just doing a haphazard, like seat of the pants kind of approach to the business. And so across the board, everything's going to get more sophisticated. And it's not just our industry. It's not, you can just go run to some other industry. Like marketing in general is getting more difficult and more competitive, and media sources are getting harder. And like, you know, there's this whole area of social that like we do have the benefit of, like, we don't ever have to be the first one into a new media channel because our customers are fundamentally conservative. We're always late adopters. And so we let other people figure things out when it gets to scale. But there's always this period of time, right, where like you can't get all the scale you need from some of these other channels, but you can get enough to get some real revenue going. And people who never move over into those other channels too also get screwed. And that's a little bit of an aside, because like audiences, like the easiest time to arbitrage an audience is when the audience is growing and the advertising is cheap. And in established channels where you can get scale, like the sophistication of how you go after that audience keeps increasing. And so if you don't move and you don't grow and your business doesn't get better, then you just get squeezed out over time. And it has nothing to do with like, my product is the best product in the world, which I hear every day from people who come in and out of the business who are like, my trading product is the best. I'm the real deal. Everybody else is fake. I'm real. Everybody else is fake. My product is whatever. It's beat this, it's beat that. And it's like, yeah, but nobody wants it because it's like, it takes them 8 hours a day to work it. But
I mean, you got to tell people why they want it.
People hate marketing because when they're bad at marketing, and they have this idea that your marketing is that you're marketing a product and somehow the product sucks, and so you have to fix that by marketing. And it's like, no, like marketing is just this very sophisticated science that's getting increasingly sophisticated. And if you guys aren't using things like what Matt's talking about, like to start to look at how you're thinking about promo, how you're thinking about product, how you're thinking about media, like you're just going to get left behind by the people who do. I mean,
Yep. And similarly, like the editorial teams, like, we're coming into this period that's going to be real tough, and you got to be real curious as to exactly what's going on so that you can articulate that, even though you're, maybe you're a 24-year-old English major right out of college. Well, now's the time to learn, right? The one of my friends on Twitter, I think he's he has a ton of followers, but he's one of the best one of the best macro and in trading guys that I know. He's anonymous because of compliance reasons, but I think he's a 26-year-old credit analyst, and he slaps. I mean, he's absolutely fantastic with calling tops and bottoms, and he's quick when he gets something wrong, he's out of it real quick. Like that's the mentality we all have to kind of take into the next level, and we have to be at least interested in how things work.
Well, I think that's it. Like we should probably close this soon, but just to like throw out to like the publishers and copywriters, like if you're not interested in the market, like this is going to be a really rough time for you, because
Yes.
not to blow smoke up Jed's ass since he's sitting next to you, but like when he wrote that A&E promo and came up with that franchise, like Jed was so into angel investing, like already, like he was deep into that market. And so when he had the idea for the product, he got the trend, he wrote the promo, like he knew how the hell to sell that to people, because he knew what the hell was going on with that market, versus like people who try and copy and they don't know anything that's going on. And so what they do is they swipe a copy and try and copy it, and then the product never really quite delivers. And you know what I mean? Like, it's just, you have to actually be interested in the markets.
Yep.
Well, that does bring me to mind. I think the last point I had that I wanted to talk about with you, which for me is probably the most important thing that's going on right now. If you have a second.
Yeah.
So I learned a lot. Thanks, man. Can I have this?
Yeah, I'll shoot it up to you.
Sweet. The copywriters so a lot of dispersion has happened in the market, right? There's been some watershed of talent that has gone to the outskirts of the market, people starting new things, people starting small things. And I can tell you that the FTC not going away, will not go away. And everybody that I know that was serious in this business got real serious about compliance when the thing happened with Raging Bull, and also when the initial thing happened, just over the years, just with some of the companies. But the Raging Bull thing really put people on high alert, and everybody got their compliance shit in order. And so you should have. And it might have been a little over the top, and it might have been a little stringent, and it might have been painful. What I'm seeing now, and the things that I'm seeing now, we are reverting back to pre-2018, 2017 in a lot of ways. And you may be sitting there, and I get it. As a copywriter, it's hard. As a product developer, it's hard. As a business, it's hard. Do not. I'm telling you this. I won't work with you. Like like if you're like, Brett, I'd love to work, blah, 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 blah. I will not work with you if you are saying things that are not compliant, or if you are using tactics on the phone or via SMS or via email that are not compliant. If you think you are flying under the radar, you are not. That's not how the government works. Like they don't, it's not like you're selling, some drugs in the corner and they bust you. Like they are building a case. And if you continue to do it, you are going to be in a world, like, think about what you're doing. Don't promise people gains. You cannot promise people they're going to make money. You cannot say to people they're going to pay for their subscription by the first trade that they're going to make. You cannot shut down services and transfer them to another service. Now you may say, well, I don't do any of those things. I don't do any of those things. That's fine. That's totally cool. If you're not going to come to the realization that you do those things, there are some numbers that you can check, which actually do give you a report card. That is your BBB rating. That is your refund rate. Your refund rate is over 30%, 40%. And you say, well, we have a money back guarantee. So do I. I got a 30-day money back guarantee. I'm refunded at 12%. I'm happy with that. That seems healthy to me. You're refunding at 40 to 50% on a 30-day money back guarantee. You have a bad product. It is a bad product. I'm telling, and you may say, well, we're giving people their money back. That's fine. But those people, even when they get their money back, are still mad. They are still mad. And you have to make sure that when you're giving people the money back, you don't just give it to the people that complain. Anybody that asks gets their money back, not just the people that bark, anybody. It is not compliant just to pick and choose who you give their money back to. Check your BBB ratings, check your refund status, and bring them under wraps. I know a lot of guys out there right now that are bubbling up and having success. I've gone through your marketing funnels. I've been contacted by your telesales. I've attended your webinars. You are currently saying things that are not compliant by the FTC. If you don't know what that means, I'm sure John knows some legal people that he can help you out with. I mean, that's why this exists as a group, as a community. You may attend these, the events that John puts on, and maybe your first time, your second time, but there are people who've been doing this for 20 years, and some of us have been caught up in it. Some of us have learned over time. Please reach out if you find yourself wondering, if at all, if you're saying, am I compliant? We can put you in touch with people that can help you. And you have time to fix it. It's not like, oh, I've already screwed up, so I might as well just keep going. You can fix it. You can walk it back. That's really what the FTC wants you to do. They want you to walk it back. And there's that. So
FTC enforcement is not correlated to the market. They don't stop just because the market went down and things got harder.
That is correct. And when things get harder for us, people start making more outlandish claims, and they start providing even worse products to people. And that is the problem that I'm seeing right now. Be very mindful of what you are promising people.
Yep. And to that end, like, if you have copy that's non-compliant and you're trying to figure out how to get it compliant quickly, like, that's where folks on the research side can come in and handy pretty quickly. There are lots of us out there, easy to contact. For me, you can follow me on Twitter at MFWarder. I'm there mostly tweeting about coal and search interests. So, it's a bare minimum of window shoppers, but always available for a consult there.
Yeah, if anyone wants a connection to Matt, just hit me up.
Yeah. So that's my two, and that's not to deter competition. That's literally because what happens is that one of us messes up, and it does affect everyone. I hate to break it to you. We're all on somewhere. Toe the line a little bit.
Yeah. One thing I remember that scared me when I did a conversation with what's his name from Easy Pay Direct, Brad. Just about merchants in general, and he was talking about how merchants, because of the risk profiles that they have, like they'll cut out a whole category just to reduce risk because of one or two players. And so, like, we've seen this with the FTC and like one company can cause problems with Google and Facebook. One company can cause problems for everybody else. Everything's interconnected, and so, like, none of us want to see people who are screwing customers out there, because it hurts everybody. It hurts the customer. It hurts the industry. It hurts everyone else who's doing things right. So the FTC is not going away. Anyway, with that happy note.
Had to be said, man. There's some wildness going out there, and I think
it's like, I know it's hard and everything right now, but like, there's a lot of great things happening in the industry. There's a lot of great things happening in the business. There's a lot of huge opportunities coming around all around. I keep saying that. And it's not just things in financial markets. I mean, just in publishing, like, the audience is growing. Like, the audience is going to continue to grow for a while. And that means that all the subsegments of the audience are going to continue to grow. The audience is getting more sophisticated. And so things that they wouldn't buy before, they're going to start to buy now in small scales. And so there's lots of cool things that are happening. There's a lot of opportunity in the business. It's just like, you're in the business, you're gonna have to deal with the ups and downs and the difficulties, and we got to get better all across the board.
One of the greatest things that ever happened to me was starting in this business around 2008. Like in 2006, 2007, as a small business. A lot of you guys are looking at it right. I've had people come up to me in their 20s, early in their career, and they're like, I don't know what I'm doing. I'm like, okay, it's tough right now. It's not that fun when it's tough. It's hard. There will be a dawn after the night. It may take a little while, but the financial markets aren't going anywhere. The desire for financial ideas aren't going anywhere. Desire for investment is not going anywhere. You batten down the hatches, you stay strong. There will be a bull market. It does come back. And when it does come back, it is fun. And you do get to really supply people with some fun ideas. Listen, if you've never held your own conference with your own people, I can tell you it's one of the most enriching things you can do is to see 200 or 500 or 1,000 people show up and be super excited about the things that you offer. Because all we hear about sometimes is negativity. Oh, you suck. Oh, stop sending me so many emails. You get 500 people that love your products in a room, that are rooting for you, that believe in what you do, that have told you about the money they've made. It will change your perspective on the service that we provide. And it's fun. And it's going to come back. It's just right now you got to stay lean and smart and honest.
Yeah. And don't forget, like, I mean, just the thing is like, financial markets is probably the most perfect info publishing industry, right? Because like you said, it never goes away. It's always changing. There's all kinds of things happening. The audience renews itself. there's like it's complicated, and so you need lots of information.
Yes.
And so it's a perfect info. There is no better info publishing, info marketing industry. And so like all the negative that we have sometimes, like to talk about, like don't that like, you know, close your eyes to all the good stuff in the industry either.
No, exactly. I mean, Brett said it best. Like, you know, it sucks that we're in a bear market. I actually love bear markets because, you know, that's when all the research that I do really comes into importance, right? But like, you know, bull markets are way easier and way more fun. But, you know, worked with Rick Rule over there at Money Map with you for a long time, and he always used to say at those conferences where we got to meet thousands of people, you know, which was a great time. You know, bear markets are the authors of bull markets, and bull markets are the authors of bear markets. So, you know, what goes down comes back up again. There'll be lots of stuff that survives. The sun comes up again, the next day, whether you're in Europe, you know, facing high energy prices in the winter, or you're here, you know, watching your Ponzi tech calls go to zero. Like there will be a day when all of that stuff will actually work again, probably the middle of next year to the end of next year. But in the meantime, just, you know, keep nimble, and you know, when the market gives you an opportunity, ramp up spending when it's favorable for you, and be aware when it's not.
Yeah,
And learn to work together a little bit more.
And I do think just what you said one thing earlier, Brett, and I'll close with this, is that you talked about like 5, 6, 7 ideas that were responsible for 80% of the profits in the industry for the last 15 years. And that's how it works in financial markets in general, right? Like you have asset classes in sectors that in each cycle kind of are responsible for the majority of the sector. So like, don't get so closed in on what you're covering right now. Like every time we have a recession and we go back into another cycle, we always see this, like different asset classes start to take off, or different sides of the same asset classes, right? Like, so whether it's crypto and the other subsector or whatever, like keep an eye out for what those are and get in there early, because that's where the publishing growth comes too, just like there is with the revenue growth.
Or ask Matt. Matt, just send me an email when you find the next
one. We got a lot of them.
Thanks, boys.
All right, guys. Thanks. Appreciate this.
Take care, guys.
Bye.